Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. His website, MacBethMcLeodPartners.com. Welcome back to the show, Hilliard, and Merry Christmas and Happy New Year.
Merry Christmas to you. It's nice to be on your show again.
Hilliard, will the Fed be forced to raise interest rates more than 2 or 3 times next year? Because the official U.S. inflation rate is around 6.2%, but John Williams from ShadowStat says if you use the way they calculated inflation back in the 70s, it's really more like 12%, because the latest figures exclude the price of a house, the price of fuel, and the price of taxes.
Yes. Well, first of all, John Williams is highly respected. He's, of course, he's not that well known because he takes a very unorthodox approach to calculating it, but his work is solid, and I've seen his stuff and I see it regularly. And
he's been a guest on this show.
Exactly. So you have the best guests. He's absolutely right. So I was trying to find the settlement. It was in about 1976, 1977. They had a settlement. It just absolutely terrified the government because it was like the 20% 1 year increase in wages, and I can't find the exact amount, but my memory says it's somewhere around that level. And I think it was it's the St. Lawrence Seaway Union, and it just sent a shockwave through all of North America. So they got busy redesigning the inflation index at that time, and basically what they wanted to do was create what was something that would feed into the cost of living adjustment that all of the union contracts were demanding. And so they wanted to make sure that the cost of living adjustment never got too high. So they excluded stuff like the stuff that you mentioned that John said. And absolutely, the Canadian number was 4.7, the U.S. number was 6.8, but the real number is 10-12% if you calculate it. And I put out if people want to look on my Twitter feed, I put out a graph recently a couple times. It shows the increase in house prices, which has been above 7% annually for the last 20 years, which every year. So that means about a 4-fold increase. And at the bottom of the graph, right beside CPI, the consumer price index is the shelter component of the consumer price index, which is the biggest component in the index, by the way. It's about 30% of the weight in the index, as by far the largest component. And it's up a tiny, tiny fraction of that. It's barely in 20 years, it's gone up something like 60% instead of 400%. So what is that telling you? That telling you that the CPI is vastly understated. But when people say inflation, it's quite interesting. The only thing they have is that index, the CPI index. So everybody thinks that that's inflation, but it's not really inflation. It's just an index that was created to meet the need for something that they could peg all these cost of living adjustments in the contracts to.
Yeah, and the thing is, your contract, you get a 2% pay raise, yet the cost of buying a house in your local community went up 20% that year. And wages have never caught up since 1976.
No, the wages are a little bit. So we have on the same graph, we have the median after-tax income, and it's up a little bit higher than the CPI, a little bit higher than the shelter cost, but it's still very close to the bottom of the graph. And mortgage debt, house prices nationally, house prices in Toronto, and especially house prices in Vancouver are way at the very top of the graph. So if you had somebody that was getting the gain in the wages and salaries as recorded over the last 20 years, they'd have to live somewhere where they didn't get the house price increases that we've seen in the big cities, and there's very few places now, especially now with COVID, where prices haven't gone up. I mean, prices in Nelson, BC aren't as high as Vancouver, but they've gone up a similar percentage. So there's no place and then of course you give up all the advantages of being in a big city, like hospitals, and sometimes you have trouble getting access to doctors and stuff, if that's important. So so will the government fight the inflation number, even the understated inflation number, in the middle of a pandemic? And we're not even out of the recession yet. We don't know for sure. I mean, obviously the numbers have bounced back, but there's an awful lot of people that still aren't back to normal. They say they're going to. They say they're going to raise rates in 2022 several times, but we'll see if they have the backbone to do it. In the past, other than in one period, which was about 1980 to about 1983, when Volcker was the Federal Reserve Chairman, the central bankers have not shown much backbone at all in terms of fighting inflation. Volcker was really the only one. And that's when interest rates went to 21%, and it caused a very deep recession, and it broke the back of inflation too.
Well, that's the problem. Wolf Richter, a friend of the show, pointed out. He said it's not so much inflation that hurts the economy; it's the measures taken to fight inflation that hurt the economy.
Yeah, well, one of the biggest components. So I mentioned the shelter index being 30% of the CPI. And one of the biggest components in the shelter index is the interest rate. So ironically, when they go to raise interest rates to fight inflation, a higher interest rate will trigger a higher CPI number. So their initial attempts to fight inflation by raising interest rates, which is really the only tool they have, will cause inflation to get worse. And so the only way it actually works, and this is what happened in 1982, is you raise rates so high that you cause a severe recession. And then prices actually come down, because otherwise people generally don't drop their price. If somebody's selling their house, they don't want to drop their price. They refuse to drop their price. You say to somebody, making $50 an hour as a carpenter or something like that, well, we want you to drop your hourly rate to $40 an hour. Well, they absolutely refuse to do that. And they will actually, go without work for several months, rather than drop their price, because they know once they drop it, it's really hard to get it back up again, right? So the tools to fight inflation are very, very crude tools, and they're very blunt force instruments, and they cause a lot of damage if they get wheeled out. I was at a conference, and the head of I think it was the Bank of Canada actually had at that time, Lowe's, he said, we have the tools to rein inflation, and it's not a problem if inflation gets out of, because this is what the central bankers are saying, we'll just let inflation run hot for a while. That'll get full employment back. We'll get the economy going again, and then we'll rein in inflation. And he said, it's not a problem. We'll do it. He said, it's not a problem. We'll just rein in inflation. But it is a problem, reining in inflation, because they don't have any, fine tuning tools. They just have these very broad, blunt tools that are, they're very rough and crude, and they'll cause a lot of problems. And I don't even know if they have the courage to use them fully.
Mm-hmm. Diefenbaker said, government is doing skillful surgery with blunt tools.
Yeah, exactly. Yeah, with brain surgery with a saw and a hammer, right? I don't think it's going to work out too well for the patient.
Well, it may work, but it probably will kill him.
The operation was successful, but the patient died.
Well, the Bank of England is I think, the only major bank in the G7 or G8 who raised interest rates. They did it last week.
Yes, and they got a lot of criticism for it, and I think they wanted to show there had been a couple of back and forth between the government and the central bank. And there's this facade of independence of the central bank, and every once in a while, a central banker wants to prove that he's independent or she's independent, and so they do something like that where they raise rates when the government doesn't like it. And but I don't think people really believe that rates are going to go up, because just checking the mortgage numbers, the courtesy of Ben Rabideau, he publishes them once a month. There's a record high growth in mortgage credit, which of course you knew was coming because prices of houses have gone up, so people need bigger mortgages to buy these houses. But the really interesting component of it was that it's a record high amount of variable interest rate mortgages opposed to fixed rate. You'd think with all of this talk about rates going up, people would opt for the 5-year fixed rate. In Canada, as everybody knows, we don't get to fix the term for 30 years like they do in the U.S., but we can fix it for 5 years, which is helpful. But if you take the variable rate, you don't get it fixed at all. And if rates go up, then your mortgage payments will go up. And now the advantage of taking a variable rate is the actual rate is lower. So maybe that's why people take the variable rate. I think they're supposed to qualify on the fixed rate plus a couple of percent higher than that. So I don't know if they're doing it like as a way to get around the qualification rules if they're close to not being able to qualify under the rules, or if they just believe that they'd rather have the low rate and they're not that worried about interest rates going up. But when inflation is between 5 and 7% and probably heading higher, and mortgage rates are 2%, like it seems like the mortgage rates have to catch up to the inflation. And usually mortgage rates are higher than the rate of inflation. So if inflation is 5%, mortgage rates usually are 7% because somebody needs a premium. Who's going to lend money in a mortgage if they're losing 5% every year while they do it? It doesn't make any sense, right? So they usually demand a premium. So this is a very unusual situation in many, many ways.
Well, they were going to make a decision on increasing the stress test, and they decided to keep it the same. And I think it's around 5%, isn't it?
Yeah, I sort of lost track of that because I just find it really amazing that people keep qualifying for these, for when they introduced the stress test in 2017, there was a slump in the prices. And then ever since then, the prices are, they got to be up at least 30% since then or more. And, how do people qualify? Because at that time, people were right on the edge of not being able to qualify. If you look at the actual data that the Bank of Canada puts out in terms of what they call high ratio borrowers, it's off the charts. Like people are borrowing at 500% of annual income, 600% annual income. And there's a significant number of them. Like, most of them are first time buyers, obviously. So how do they get qualified? It's boggles the mind, but there is one little loophole in there, and that is, if you got a big enough down payment, then, the bank has the flexibility, I believe, to waive the rules on qualifying. So, the rules probably are applied quite strictly on the, insured mortgages, but when you get into the more conventional mortgages, there's some flexibility there. So if you get a big enough down payment, now people are not supposed to borrow the down payment. You have to actually sign a paper that says you didn't borrow the down payment, but I don't know, maybe people don't always tell the truth about these things. I don't know.
We'll have more with Hilliard MacBeth right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, so many people have criticized the multi-billionaires, in some case trillionaires, for not paying taxes. But Elon Musk, I believe, might have paid the biggest tax bill in history.
Yeah, he's going to. He hasn't paid it yet. He did since September. He's been selling stock, and he filed when you're he owns a big chunk of Tesla shares, so he has to file a form with the SEC when he does any selling. So he filed a form, I believe it was in September, that said he was going to be selling, and the reason was that he has a bunch of stock options that are expiring. So we talked about this briefly last time, but there's a big tax liability when you exercise a stock option because it's considered employment income. So it's in the U.S. it's treated as income tax. So to protect yourself if you're exercising it, well, Tesla recently hit $1,200. Now it got down to $900 recently. So about a month ago it was $1,200. Now I think it's rallying a bit today. But so he would be on the hook for the tax on the $1,200 sale, even if the stock was $900 at the end of the year. So he's very wealthy. He's the wealthiest man in the world, wealthiest person in the world. He was at the peak up around $290 billion with shares in Tesla plus SpaceX. Maybe he's a little bit lower than that now. But at any rate, he felt that he should be selling stock in order to have the money to pay the tax, and he's going to pay something like $11 billion. If he doesn't sell any more shares between now and the end of the year, he looks like he owes about $11 billion in tax, which will make him the largest ever taxpayer, individual taxpayer, and probably more than most corporations, even big corporations as well. And he's paying the tax, and yet he's getting it. I remember maybe a year ago, Bernie Sanders went after him for being a billionaire. And then a little bit more recently, Elizabeth Warren went after him for being a billionaire. I'm flabbergasted because there's lots of billionaires out there that deserve criticism more than Elon Musk does. Elon Musk has made this money because the shares in the company that he was one of the founders in have gone up so much, and but not because he's done anything nefarious or under the table. There's lots of billionaires. You can read about them in a book called Dark Money by Jane Mayer, Mayer, if you want to learn about all the other billionaires that are less admirable than Elon Musk. But I guess they're going after him because he's a very public figure, and a lot of these other billionaires are kind of operating in the shadows. By the way, people might be surprised to know that there's actually only 2,000 billionaires in the whole world. And about a third of them live in the United States, so that's about 600 or 700 out of 2,000. But Elon Musk is the richest of them all, and he's also the biggest taxpayer of all now.
Well, something, Elon Musk continues to amaze. Every other billionaire or trillionaire does their very best to pay nothing in tax. And he seemed quite cheerful to do it.
Well, you sort of wonder. So there's a conspiracy theory. Do you want to hear the conspiracy? So
why not?
The conspiracy theory related to this is that Elon Musk, and there's a big group of people out there that are thinking this, and it might be correct. I'm not saying it's not correct. Is that when you're the biggest shareholder in a company that you founded and is doing phenomenally well, you don't want to go out and sell a bunch of stock because it makes it look like you don't believe in the company anymore, right? And so maybe they should be selling the shares too. So you need a justification to sell. You say, oh no, I still like the company. I still think the stock's going to go up and all that, but I have to sell for tax reasons, right? So the conspiracy theory is that all of this is a cover story, and he's happy to pay the tax because he knows something that means that maybe Tesla stock will not be as great. It's gone from something like $20 to $1,200 in a fairly short period of time. So wouldn't it be nice if you were the biggest shareholder in the company to sell a few shares at $1,200 or $1,000 before it goes back down? I'm not saying it's going to go back down all the way to $20, but it could go back down. It was $500 earlier this year after having hit 880, and certainly it's quite possible it could go down to that again if car sales slowed or if there was some issue. They're moving very fast. They're building a new factory in Texas. They're building a new factory in Berlin. They've got a big factory in China that's been running for a couple of years. They're bringing out new products all the time. they haven't really had a big stumble yet, and yet you'd think that most companies that are trying to do that much would sooner or later have come some kind of a setback. Give you an idea, Amazon, the phenomenal company, really, hit $60-something in 2000, and a couple of years later it was down at $6. So it dropped just about exactly 90% in 2 years after hitting its peak. And now it's over $2,000 or $3,000. So it didn't matter. But in the meantime, for the people that bought it at $60, it was pretty disconcerting to go down to $6. So that, even though that company was going to be the world leader in that field, it's still possible to have some pretty big setbacks along the way.
Now, talking about Canadian house prices, the Canadian Real Estate Association giving us incredible numbers, 12% over a year, some numbers higher than that. But also pointed out to us by Ross Kay, friend of the show, the reason the prices seem higher is that first-time buyers can't afford to get into the market, so only mid-range or higher homes are being sold. Well, they're automatically more expensive, so if you average out their price, it makes it look like the average house has gone up tremendously in value over the past year, but that individual house in the mid-range really hasn't. What's your view on that?
Well, exactly. You and I have talked about this in the past, that those West Van homes that are selling for $5, $8, $10 million, they're the favorites of the money launderers, because the money launderers, rather than buying like 10 $1 million homes, they'd much rather buy one $10 million home. It's just easier, right? And so the more they pay, and they don't care how much they pay, because they're basically, their goal is to launder the money, not to make a profit. It'd be nice if they could, but they don't. That's not their main goal. So if all of the first-time buyers are priced out of the market, and all you've got left is the money launderers and the speculators and people like that, then of course the prices are going to be a lot higher. But so that's absolutely right. And when I looked at the website for the Canadian Real Estate Association, also the one we use is called Terranet National Bank. Terranet National Bank tries to get around that by doing a paired sale. So they try to find a property that was sold in the past and now is sold again, and they compare the price on that same property. So that mitigates a bit that problem of the change in the mix, but it doesn't completely resolve it. But it also, there's another angle to that, and this is very, very big in Canada right now, the biggest in the world, of all of the real estate markets in the world, is the insane amount of activity in renovations and rebuilds. So there's a whole bunch of homes that are basically brand new homes, but people buy the lot. In Edmonton, the numbers are, in a good neighborhood, are between $500,000 and $1 million for a teardown, and then they spend another $500,000 to $2 million building a new home. So when they record the price, it says, okay, they paid $750,000 for the lot, and then 3 years later it sold for $2 million, because of course they spent $1.5 million fixing it up, or maybe in many cases they demolish the house completely and build a brand new house. But Terranet National Bank does not make any attempt to adjust for that, and I thought they would have. I was pretty surprised to find out that they didn't. They said it's just impossible to do, which I don't buy that. I mean, I think you have to take out a building permit, and you have to put a dollar amount on the building permit when you take it out. So I think it's possible that they could adjust for that. So these gains that are showing there's definitely still gains, but there's an exaggeration, because they're not accounting for the fact that you're going from a property that's basically just selling for the land value, we call it a teardown, to a property that's got a brand new house on it. Well, of course it's going to be, somebody put $2 million into it, or $1.5 million or whatever, and it's going to be worth more. So those gains are, in other words, you have to invest money to get a gain. Now that isn't a true gain. That's a reinvestment. And we know that that's happening in a big way, because Canada's, residential investment in housing number is at 10% of GDP now, which is by far, I mean, the peak in the U.S. was 6%, never got above 6%. When the crisis hit in 2008, it went down to less than 3%. Now it's back up to about 6% again, which was the peak. So Canada stayed up at 7, 8, 9, 10, now 10% for the whole period, the whole 13, 14 years since the crisis hit. So we've been upgrading the quality of our housing dramatically every year by a very large amount. And so part of the gains they're showing are actually not real gains, because you'd have to adjust for that investment into the housing stock to get a true gain.
Maybe conveniently they're not tracking that statistic so they can claim, well, the average price is up $2 million, so that's what you should be paying for this house.
I think that they don't go out of their way. Let's put it that way. I don't know if it's deliberate or if it's just convenient, but it certainly works in their favor. And like I've talked to many people, and they say, I know I'm buying a house in a housing bubble, but when I go to the bank, they say it's okay. When I talk to my parents, they say it's okay. When I talk to my peer group, I'm talking about young people, say 25, 30 years old. I talk to my peer group, they all say, oh, you've got to buy now, you can't wait, and, don't worry about the prices being so high, they'll only go higher. And their grandparents are saying it's okay, and somebody's offering them to loan them the down payment, or give them the down payment as a gift. I mean, the realtor is obviously saying it's fine to do it. And so it's understandable that these people are getting drawn into this, but if the prices ever go down, there's going to be a tremendous lot of debt. And I obviously I believe they will go down, but I thought they would have gone down by now, that's for sure. It's stretched way beyond, in terms of the time, but it's also in terms of the magnitude of the prices. People with combined income of $150,000 buying $1 million home is just nuts. That's about 3 or 4-fold more aggressive than what it would have been 20, 30 years ago.
Hilliard, have a great Christmas and a super happy New Year.
Thank you, and same to you and your family.
My guest has been Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Check out his website, MacBethMcLeodPartners.com. He's also on Twitter at HMacBE. If you have any questions for Hilliard or any of our other guests, you can send them to info@HowStreet.com, and we'll ask that question for you. Our YouTube channel is Talk Digital Network. Find us on Twitter at House Street. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of House Street Media Incorporated.